Hi there, this is Cambridge House Live. My name is Jonathan Roth. I'm joined now by Ross Beaty. He's a legend in the mining business. He is the chairman of the board of Pan American Silver, the second largest silver company in the world, and he's also the executive chairman of Alterra Power. Thanks for joining me.
You're very welcome. Happy to be here.
The global economy here, everyone is really concerned about where we're at. From your vantage point, how do things look?
Well, I'm always bullish. I've done very well being bullish, and I'm always going to be bullish. I'm always the kind of glass half full sort of a person. That's just who I am. I'm a risk taker. I'm an entrepreneur. That's just how we're built.
Right.
So, you know, I always look at the positive side of the world, and I'm not afraid of what's happening in Europe. Europe is almost irrelevant for my business, which is metals, resources, energy, minerals. They're not consumers. They don't really influence the world too much. I look at Asia. I really look at China. China's the bull in the china shop here, literally. That's the market that I'm most concerned about. So when I see all this noise about China slowing down, China having a property boom, having a bust, then I really say, is it true or not? And then I say, even if it were true, does it matter? And I look at what China's doing in the metals industry. They're buying like crazy, and they're still buying, and you see that reflected in the price. Copper is still $3.30 a pound. That's very, very high price, and inventories are going down. That means the Chinese can't find anywhere else to buy the copper that they need for their growing economy. And even if China is only 6 or 7% growth, it's on a very high base relative to a few years ago.
Sure.
Like 6% in China means a lot more today than 30% did in 2000.
Right. So the fact that we saw a bit of a dip in the first quarter of 2012 down to 8.1%.
Who cares?
In the grand scheme of things, it's
a speed
irrelevant.
bump. It's a speed bump. It's not irrelevant. It is something to watch. It is something to be concerned about.
Sure.
But it's not something the government can't do something about. The government of China has immense horsepower to fix a structural problem in banks. It's not broke like the American government is and a lot of European governments. China's government is in very strong shape. It has $2 trillion or $3 trillion of savings in US dollars it can deploy. It has a very, very good capital structure in China. The banks themselves might not, but the national government does, and it's got a lot of room to do the kind of quantitative easing that it did in 2009 and that the US government did very successfully.
Right.
So I don't panic. I'm concerned, obviously. I don't see a reason to think this is the end of the party. The party's been going in my game now for 11 years. That's a long time, typically. But I've always maintained we are in a super cycle. We're in a secular bull market driven by these once-in-a-lifetime things that are happening in Asia, of people moving from villages to cities, becoming manufacturers for the world, and now the big question is, will they not be manufacturers to themselves? And if they are, and if they will, this market's going to be strong for another 10 or 20 years. Or I go to Indonesia, 220 million people, all trying to have better lives, meaning metal consumption, energy consumption. I go to Brazil, I go to the Middle East, and everywhere you go, you see growth. So it's very hard for me to be a bear.
Given what's going on from your vantage point.
Absolutely.
Now, back in April, Citigroup came out and they said that potentially the super cycle is over. That's what they said. I mean, are they right, wrong? I mean, clearly from your point, you think they're wrong.
I think they're wrong,
yeah.
Yes.
Okay,
yes.
Now let's talk a little bit about what's going on in the United States. Obviously it has to be concerning somewhat. We see a fiscal situation that's somewhat dire. To what degree are you worried?
One man's fish is another man's fowl. I say, bring it on in a certain sense, because the more financially risky they are, the better for gold.
Gotcha.
And I love gold. It's a wonderful metal. I think gold has great legs.
Silver.
And silver. Silver's poor man's gold. Silver's got a good future because there's financial stress in the world. People are looking for alternative investments because they're worried about their currencies devaluing or their countries going topsy.
Right.
And they want to buy some gold. And so that's what's been driving gold to take it from $250 an ounce to $1,600 an ounce. Can it go higher? Of course it can go higher. Are the problems in the world resolved right now? No. They're still worrisome, especially in Europe. The U.S. is actually kind of looking pretty good right now. It's looking a lot better than it was a year or two ago.
How come? What's fueling that
Just
optimism?
I think the U.S. companies are doing better.
Right.
The dollar is more competitive. Manufacturing industry is stronger. There's a lot of spare capacity. Inflation is low. Interest rates are low. It's a very, very good market for in manufacturing, for example, to prosper in. And the companies, corporate America is in pretty good shape. Debt-wise, markets-wise, it's in pretty good shape. So the governments might be in tough shape. The counties, the municipalities, But the companies themselves are in pretty good shape, and that really is a driver of the American industry, because it is fundamentally a free market system in the States compared to, say China or say Europe, which has got a lot more government involvement. So when the governments are in trouble there, you really have to start worrying.